So we have another huge shakeup in the top 10 retail stocks that were bought by us, the little guys out there, but there is a problem for us too that we obviously just can't stay away from. So let's discuss the good and the bad from a long-term buy and hold investor's perspective, as we have many changes on this list that we got to talk about. Just make sure you like the video if you like getting the truth out the hype, because that is exactly what we're going to get today, guys, despite the fact some of these stocks are hypey type of stocks, and that's okay. We can still discuss them. Just simply because they're hype doesn't mean that they're necessarily trash either. So kind of keep that sort of thing in mind. As we kind of move forward. And remember, these are not my stock picks, guys. These are the top 10 stocks that all of us together picked up the most from the past month. That's where I'm getting this list from. This is not my top 10 stocks or the top 10 stocks I want to buy or anything else of that nature. I'll have my top stocks that I want to buy for next month coming up here in a couple of weeks, or maybe a week. I don't know. I'm not even sure what today's date is. That's how far behind I am in regards to checking out dates and such, but I know it's coming here soon nonetheless. All right, so on to the first stock. And that would be GameStop. Guys, we are so close. We're so close with getting rid of this stock off the list, so that way we don't have to discuss it again. I don't know what's holding it right there in the top 10. Last month it had actually jumped up to like number 6 or something like that. So it's good to see us backing off. Again, you can look at the business fundamentals. That's all that I have to do to know this is not a stock I want to be in. Not even in the world that I would want to invest in right now, because the whole video game industry as a whole is struggling right now for a variety of reasons. I'm not going to go down all of them because it gets political and everything else. Who freaking cares at this stage in regards to all that sort of stuff? Just know that gaming is in a tough place. Physical retail is in a tough place. And then you got GameStop that combines both of them, but yet somehow there's going to be some big mega gamma squeeze, or it's the next, who knows, Palantir on this list, or whatever the case is, depending upon who you talk to. People trying to defend, raising capital through debt and equity markets is somehow profits, even though it's not really profits, guys. You basically took on debt in order to. You basically paid a price for those quote unquote cash that's coming in, going on the balance sheet and such. It's just silly talk at that stage. You understand people are just basically buying hype narratives and not actually understanding just the basics of fundamental analysis when it comes to stocks. So hopefully next month we can get this one completely off the list and get a new stock into the top 10, more importantly, because there are some great stocks out there. But let's jump on to number 9. And that one is Palantir. So my guess is a lot of this buying is obviously doing with the fact that Palantir just continues to crush it. But they're at all-time highs, meaning we are buying the stock at a very, very rich valuation. Now, this stock was not on the list. Obviously, I understand it not being on a list when it was, $6, $7, $8, $10, $15. I don't know, whatever the price was, where we were just busy gobbling up shares for more than a year at those type price levels. But when it got up to, 20, 30, 40, we still wanted nothing to do with it as a retail crowd. It didn't even make the list of the top 10 until it got well over $100 per share. And that's where us as retail, sometimes we are early in some cases, but it shows you the vast majority of retail was not early to Palantir. Yes, those of you guys on this channel, those of you guys that follow a few of the other Palantir channels, you guys were on this stock early. But the average retail investor was way late to the party on this one, and they're not going to see the same type returns that we saw in this stock. So I'm happy to see it on the list. I just wish we would have seen it a lot earlier when it was at a much better valuation than it is right now, because it might very well fall off this list. My guess is it does fall off this list if it takes a significant haircut, right? If it takes a 30, 40, 50% haircut due to valuation concerns, whenever all the AI hype dies down and all that sort of stuff, not because of earnings. Earnings are unbelievable. Blow it out of the water, incredible, all-time great earnings. That's not the problem. The problem is valuation. And if it takes a haircut because of that valuation, my guess is it falls off this list instead of people buying more of it as it goes. I hope I'm wrong, but let's wait and see. That's kind of what I'm waiting for and kind of watching with this stock. So number 8 is Meta. Hey, you guys know I love Meta. I'm going to have to start buying Meta because it's finally almost down to my price target there. I can't wait for it to get there so I can add more shares of Meta. It is the easiest money I've made in the stock market. Not my highest, obviously in terms of percentage growth that I've made over the past few years in the stock market. For the past 3 years, Meta has been the easiest money. Obviously, Palantir would probably be the biggest gainer during that group due to the fact that I'm sitting on like an 18x or something ridiculous like that with Palantir. But nonetheless, when it comes to Meta, and Meta specifically, it's been easy money. Every single time it gets undervalued, you just buy the stock because they have so many different monetizations lever. The margins are so great. He makes mistakes, Zuck's not likable. He goes for things all the time. Yes, sometimes he's burning billions, but they have like this tap that they can just turn on more profits and have more money to light on fire. And it's just kind of a rinse repeat with Meta. Anybody thinking that they can't do that or they're done growing or all these other sort of things, it's just laughable, guys. The billions of users across all their different platforms. Not all of them are fully monetized yet, meaning they have more and more levers to pull for easy profits. And oh, by the way, if he happens to figure out something with all his different AI initiatives and such, that is probably going to be very high margin and hit that bottom line exceptionally well for us. Of course, just simply boosting up that share price even more. So Meta for me, getting undervalued right now. To me, it is undervalued right now. And so absolutely, I love seeing this one on the list. I hope it stays on the list if it continues to fall in price. So number 7 is Google. And this one actually jumped up 2, 3, 4 spots or so. You guys know I love Google, but I wish the stock would have been higher on this list or on this list at all a few months ago. I guess 6 or 8 months ago now, at the beginning of the year there, when we were just getting stupid pricing. Google was dying. It was going away, whatever the case was. So good to see Google on the list, but it's jumping up a few spots at a period of time where it's at all-time highs. But the good news is it's still not crazy overvalued or anything else like a lot of other stocks on this list. It's right around fair value, depending upon the valuation you want to give to it. So I don't have any issues with buying it right here. Great to see it on the list there. It jumped up big though. So you guys know I love Google and I'll probably continue to buy it too at some point in time in the future if we get a little bit of a discount. Number 6 is Microsoft. Another great company, another company that is executing very well. Not as good as Palantir. Please don't take it that way, but they're executing well. They are absolutely right in the mix with the AI race. Although I don't personally own it, it doesn't have a crazy valuation attached to it. It doesn't have crazy hype behind it. It doesn't have a lot of those other things that's going on right now in the market. Obviously, they can weather any downturn that happens with the economy, with AI spend, or whatever else is out there. Microsoft is in a prime position to just be just fine during that sort of thing. So great stock, great pick by you guys out there. But we got to talk about number 5, and that stock is Ford. That's all I got for you guys. It's the same thing with GameStop. AMC was on here for a long time. Why us as a retail crowd wanted to buy AMC in mass instead of Palantir, I have no idea. But Ford's on here as well. Again, we talked about it before. Some have said it's a dividend play. Some have said, hey, it's just a stock that I've had forever. I don't want to get rid of it. Okay, maybe so. Somebody else I think referred to, somebody was trying to get some sort of a Wall Street bets type of trade going on with it there for a little while. Hopefully you guys aren't falling down those narratives. Again, I don't track any of that sort of crap. I don't get on any of those message boards or anything else of that nature. So for me, this is one I'm staying far away from. Legacy auto is just, it's too many albatrosses, too many problems, too much of everything for me to ever feel comfortable buying those stocks for any reason in my portfolio. To me, there's just much better buys out there. Definitely one we're missing. Number 4 is Apple. Now, you guys know it fell big on the list last month, right? So it's stuck right here in the same position it was last month. You guys know Apple is my favorite stock. It makes up the biggest position in my portfolio there. I absolutely love the company. It is absolutely just as much a flight to safety play as it is, I won't call it a growth beast like a lot of the other stocks are on here, but there's definitely an appreciation there that you don't get with a lot of other safety stocks where you don't really expect it to appreciate unless we get into some sort of a downturn, some sort of a down market where just money goes there for safety. Apple kind of plays both sides there a little bit. We'll see how iPhone sales continue to roll out as the year goes on. That to me obviously drives a lot of the revenue for right now. We'll see what they do with AI. So far, they've not done well in that particular space, even though to me, they have the most unique opportunity out of the group just due to their, ecosystem and their, amount of customer data that they have that they don't share and everything else of that nature. They could really do something special there if they really put to it. Obviously, they partnered up with a few folks to try and help with those initiatives, but so far those have been kind of lagging. But again, it's a great company, great stock. I understand why people want to own it. It's one that hedge fund managers are going to run to. It's one that, large institutional investors are going to run to. And it looks like one that obviously us as retail is also buying as well. Stock number 3 is Amazon. Love seeing this one continue to be high up on the list. It is still at a cheap valuation. They are executing highly, which they always have done. We are right in the middle of kind of their growth cycle in regards to how they spend and how they show profits and everything else of that nature. So great time to be adding to this stock here. I think we got a lot more to run in regards to Amazon. I think they got a lot of different winning ideas out there that are slowly in the background, just like AWS did, just like others did, creeping up, and are going to be massive revenue and profit drivers into the future there. Obviously, when they go through the next massive kind of CapEx expansion for all the business lines, not just AI, but everything else, that right there will slow down the numbers. But if you understand Amazon, you'll know that's just how they run the business, and you'll be able to catch opportunities there as well to own a great business long term. But I don't think anybody sees Amazon going anywhere over the next 3 years, except for more and more and more market share. Stock number 2 is Nvidia. Again, I don't know what else to say. It's great company, great management, great execution, great everything all the way around. Now, I don't personally own it because I don't understand the chip sector well enough. However, I can see and identify a great business, no problem at all. And there's no doubt in my mind, Nvidia is a great stock. I absolutely love everything that Jensen and the team over there are doing. I do believe they have more runway during this super cycle here. And it seems like they're really good at not only being so far out ahead that it takes competition time to catch up. And by the way, competition is catching up. Two things are really working in Nvidia's favor. One, valuation still is not terrible on Nvidia. And number two is, man, they just seem to surprise with something out of the blue that they drop on the market and go, hey, we got this new thing over here and it's, 10 times better than this thing over here that we were just selling you guys for an ultra premium price, right? So it just kind of, oh, by the way, this one's going to be even more premium price, but you're getting more bang for your buck. They just have that ability to do that. Now, how far they can continue it? That's kind of the question there. But so far, why would I doubt this management team when they have continued to execute on a high level for years now during a very, very tough environment? All the other chaos, higher interest rates, everything else, guess what? Hadn't mattered for Nvidia at all. But we got to talk about the number one stock we were buying, and that is Tesla. So if you kind of want to look at the last 3-year period and you kind of want the antithesis of what Nvidia did, that's kind of been Tesla. And I don't say that to dog out Tesla, just they haven't executed in that same environment. They have not done well. Now, the good news is at least whenever I watched the shareholder meeting, I felt like it's the first time, although I ignored all the ridiculous timelines and everything else, all the hypey stuff that was in there and the cringy questionnaires and things of that nature that were on that. But what I did see for the first time in probably 3 years is an Elon who looked somewhat engaged, who looked excited about some of the things he's working on, and just kind of a different demeanor overall. That is nothing but bullish for Tesla long term, because when he goes and plays on his little side quest, you see it. Poor execution, poor decision making. Everything just lags. And obviously we saw the fundamentals erode and the stock got punished for it. Now, unfortunately, especially since this is from the prior month, Tesla was at all-time highs and significantly overvalued no matter what metric you pull at it and you look at it there. I know somebody's going to go down and comment and say, hey, Robotaxi is going to add $1 trillion this year to the bottom line and other silliness like that. Oh, Optimus will be here next year, so that's going to add another $1 trillion. And I don't know, all sorts of ridiculous stuff like that. I stay away from all that hypey stuff. And instead, I look at the fundamentals, and I know those are years away from providing me enough and significant bottom line profits in the end, enough revenue to then generate those profits. Now, again, with Elon more engaged and back in the fold, the good news is that means that some of those things that were basically trailing and maybe would have gotten finished for another decade, that timeline will definitely increase, but it's not going to turn around in a year in terms of all of a sudden you're down, and then all of a sudden massively up. It's going to be a nice, slow turnaround. Big business, margins have been compressed. There's a lot of other things working against them as well in the short term. Obviously, once they get some of those initiatives out and rolling and get through all the regulatory hoops and all the other stuff that goes along with that, obviously, then at that stage, Tesla's runway is much longer. We'll see in regards to valuation, though, how far Wall Street decides to beat it down in the meantime, if they beat it down at all. But it's Tesla, right? It could go. You told me at the end of the year it was at 550, I'd believe you. If you told me at the end of the year it was at 250, that's just as likely because it's Tesla, and that's kind of what it does, right? It can go extreme one way or the other. So I always say, if you're going to own Tesla stock like I do, you got to be ready for the roller coaster, because that's absolutely what you're riding. And if you made it this long in a video and you don't want to wait until the Black Friday sale, I may have left something special down in the pinned comment for those of you guys that just can't wait. If you want access to, 5 free courses, free coaching, be a part of the best 6, 7, and 8-figure Discord out there, you want to personally work with me to help you out with everything, check it out. It's the pinned comment down there. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.